Hi, my name is Alex Carlucci. I'm here with Dale Allentunny from Guston Cho Associates, and we have a guest, Eric Jeanette from Dream Home Financing. And today's topic is lates after a bankruptcy, but I'm going to add to that before bankruptcy, during a bankruptcy, et cetera, et cetera. So there's two types of bankruptcies that we deal with on a common, often, and that's a Chapter 7 and Chapter 13. So I first want to start off with a Chapter 13. Um, we specialize in Chapter 13 mortgages. Not a lot of banks do that. And there's a before, there's a during, and there's an after that will affect your ability to get a mortgage. So let me start off with the before lates before you file your Chapter 13. Now, when you file a 13, you're derogatory, let's say on your mortgage or a car, those are considered installment loans or student loan or personal loan. Those are installment debts. So when you go into the bankruptcy and you've been in it for only 1 year, then those lates on those mortgages or installment loans will affect your ability to get a mortgage. Because what the rule is for a Chapter 13 mortgage is they look at a 24-month window, and you can't be more than 2 times 30 days late on installment debt. So your credit cards could be an awful mess going into a Chapter 13, and it won't affect your ability to get a mortgage while you're in the 13. So, but let's say you filed the 13 1 year ago and you had three 30-day lates on a mortgage or 160 on a car. Either one of those will disqualify you because you can only have 2 times 30. You have to wait another year and stay in that bankruptcy for another year and be in that bankruptcy for 2 years until you have those, you fit the qualifications where you don't have no more than 2 times 30 on any installment debt. And then you'd be able to get a mortgage. But let's say you don't have um, an installment late going into your bankruptcy, it's just a bunch of credit cards, you're eligible after 1 year of paying your Chapter 13. Now, when you pay your 13, you want to make sure you're on time on your 13 payments always. There's some exceptions, but I don't want to even go over those exceptions because it's hard to get them through. But if you're on time on your bankruptcy payments and you've been in it for 12 months and you don't have any more than 2 times 30 installment, and then I can do a loan for you based on your credit, based on what those types of lates. So if you're late in that 1 year on your bankruptcy payment, then you're disqualified automatically. And you'll have to wait at least 2 years from that late. I have some investors will do it, even though you're late in the Chapter 13. If you're clean for 2 years after that, then you can do it. Now, if you're late after you get discharged, then you're also not eligible. If you're late, like let's say you open a credit card right after you get discharged and you're late on your credit card afterwards, now you have to wait. Now you're in trouble. Now you have to wait another 2 years from that late payment. And that's any kind of late, even a credit card late will disqualify you then. So beforehand, you don't want to have installment lates. If you want to get out of that bankruptcy or buy a house within less than 2 years of filing that bankruptcy, you don't want to have a bunch of 60-day lates on installment. You don't want to be late on anything. If you open credit while you're in the 13 or your 13 payments, don't be late on anything. Then you're good. If you're late, we got problems. So remember, don't be late on anything in your life whatsoever while you're in the 13. And then when you get discharged, don't be late because that will disqualify you. Now, when you do a Chapter 7, it doesn't matter what you're late on going into the Chapter 7. You discharge it. And we do have some investors that'll do 1 day out of a Chapter 7. They're really, really funky type of loans, 40% down. You have to have credit open. You have to keep some trade lines open. You can't discharge all your debt. You have to show a certain kind of thickness to your credit, and then we could do it. But the traditional is 2 years for FHA, 2 years for VA, 4 years for conventional. But we have non-QMs that'll do 1 day out. Most of my clients won't qualify for the 1 day out. 1 year out starts to get a little bit better. You can start doing 20-25% down. You have time to establish credit again. We have those. Also for the Chapter 13, we have non-QM options for just being discharged right away too. So we can do a non-QM loan. Again, a large down payment, trade lines open, and we can do a non-QM. So if you discharge from a Chapter 7 and you go late on your credit, you might have trouble in underwriting. Now, this is an underwriter's call. and they all flag it. If you come out of a Chapter 7, you're late, they'll disqualify you. Even though if you're clean for 2 years after that, I've had some underwriters have problems with that. They think you have a disregard for debt because you just got discharged all this debt. 2 days later, you open a credit card, you start paying late again. They can deem you just a high risk person, not do the loan at all. I think I can get away with it once you're 2 years clean. Even if my computer tells me 2 years later after your discharge, FHL eligible, you get approved eligible, but you had one credit card late in that 2 year window after the discharge, the underwriter could say, I don't care what the computer says, you're late after bankruptcy, I'm denying you. And that's my best little summary. And I want you guys to step in and add what I may have missed or correct what I may have said wrong. Go ahead.
Yeah, go
Alex,
first.
yeah, how many times have we had, this has come up recently too, where I've got deals I gotta wait to get done till the end of this year, where they had, let's say, lates on a car going into a Chapter 13. And, when they do the 24-month look back on installment, the borrowers get upset, well, that's what led me to filing Chapter 13. I had these other problems. I was running late on this or that. I've been perfect on the 13 for 18 months. Yes, I did have car lates, but unfortunately, because we have gone back to underwriting and they point out, you know what, we battled it and it's a firm 2 years. You know what I mean?
Yeah.
And that's not something that always was in the past, but it definitely is now.
Yeah.
And maintaining a great payment history while you're in the bankruptcy or after a bankruptcy, it's critical. It's absolutely critical.
Right. So let me tell you something. When you file a Chapter 13 or Chapter 7, but really more for Chapter 13, because we specialize in those loans, we do them while people are in it. Let's say you have a mortgage right now and you file the Chapter 13. Now the mortgage won't report on your credit. And you think that you're paying late, it's not going to get caught. It does get caught. They make a phone call to the mortgage company and they ask for a 24-month history of your mortgage payments. And that's how they catch it. So don't think that the fact that it's not showing on your credit report, you're getting away with it. And when it comes to your trustee payment history, make you get something from a trustee website showing the payments. So they're like FBI agents trying to figure this stuff out. They don't close a loan until they'll put their child's life on the line, that they're sure that you're on time on your mortgage, on time on your 13. There's no way to get around it. I have a lot of customers that think that if I don't find it right away, then they got away with it. And you're not getting away with it. They turn over every stone and figure everything out. So keep that in mind. Just because you claim bankruptcy and your lawyer says, hey, your mortgage payment won't report, so don't worry about going late. Well, he doesn't understand the mortgage world. Worry about paying everything on time because they will figure it out. They don't just glance at your credit report and say you're good. They do phone calls to the mortgage company. They get trustee payment history, and then they look at your credit report, and those three things will tell them your credit profile since you filed that bankruptcy.
And there are people who think that if they have a bankruptcy or a foreclosure or something that doesn't show on their credit report, that they think the lender's not going to find out. And we know that lenders have other ways to search for these things, and they do. Your credit report's not the only place where these things are found. So, right. Alex, why do you think these recent changes were put through where they're going back so far, like with the 13s, and it's not just that you've made 12 on time, Chapter 13 bankruptcy payments? What is causing this to happen?
You know what? It's one of those things where there's a sea change, and I think the guidelines. I actually reached out to FHA and asked them what the real guideline was, and they couldn't answer. So there's a manual underwrite rule that says 24 months, nothing late in the last 12, including credit cards, and nothing worse than 2 times 30 installment. And then there's the Chapter 13 guidelines that read just 12 months on time.
Right.
And they commingle them. And I just think it's one of those things where there's a sea change and they're switching back to the manual underwriting rules. And this happened to me when it came to disputes. There was a time when you couldn't have a collection with a zero balance and have it disputed. All disputes had to be removed on collections, no matter if there's a zero balance or not. And now it shifted to the better, where if your collection's zero, you can leave the dispute. And it wasn't always that way. 7 years ago, when I first started doing these, they were doing that. So it's just like a sea change. Maybe FHA is not buying them on the back end, and they're being told by FHA. I don't know.
All right, so maybe it's not really an FHA thing. Maybe it's a wholesale lenders that's deciding to implement the rules this way.
Right.
Maybe, or you run into an underwriter, right? So, and I'll share an example with you. There's a wholesale lender who I've known for years, and they do they do 1 day out of foreclosure.
Right.
You can buy another house.
Right.
Okay. Depending on your credit score, anywhere from 20 to 25% down, they'll do it. But then one of the customers got denied by the underwriter because they had recent late mortgage payments. I'm like, well, that doesn't make any sense.
Right.
So I called their director of marketing, who I have a relationship with, and I said to him, I said, can you explain how you guys say you do, you can originate loans for people who have a recent foreclosure and underwriting's denying the file because they got recent mortgage rates? He says, yeah, but that's wrong. Who's doing this? So they had to go and correct it because the underwriter was, reading the rules the way this underwriter felt like he or she wanted to read the rules, and was having their own overlay, their own personal overlay, right?
Right.
So I'm sharing this story to say, maybe it's an underwriter that you're getting hooked up with a lot, or it's the particular lender that you're sending these files to. What do you think?
I don't know, and I'm going to tell you, I tried to get to the bottom of it because I wanted to learn. So I reached out to FHA, and they couldn't give me a direct answer. They kept saying this is over my head. They kept referring to, 1 year in the bankruptcy is all you need. The manual underwrite, the 2 years, yeah, they're right on that. I'm like, which one is it? Like, I don't know. And then they escalated, and they said I get an email from someone who's higher up. I never got it, but let me tell you, when I first started doing these about 7 or 8 years ago, the rule that I was closing this on was if you had a car that was brutally late going into the chapter 13, let's say it's 150 days late. If you included that car in the bankruptcy, it excluded that rule and only cared about the 12 months on time. If you kept the car out of the bankruptcy, then it's victim to that manual underwrite rule. That's what I was doing the first year and a half, 2 years. And then it just slowly switched in this weird, like, what's going on? All these underwriters are saying no now, and they're pulling out the manual underwriting guidelines. And I don't know why it happened, and I couldn't stop it. It's like, you can't stop it. Who do I complain to? I reached out to FHA and got nothing.
Yeah, I think it's a judgment call at underwriting at the lender. It's
right.
What I personally think it is.
It's not clear in the guidelines. If you read manual underwrite, it's clear. If you read chapter 13s, it doesn't talk about prior to. It just says 12 months on time. And it's very confusing, but it is a manual underwrite. So maybe you go off the manual underwriting guidelines, but it's not listed.
Yeah, but
the chapter,
if every chapter 13 deals in manual underwrite, then why do they have these other things that say 12 months?
I don't know.
It doesn't make sense.
I know.
What the manual underwriting guidelines should say, here's what it is, unless it's chapter 13, then follow the chapter 13.
Right.
Well, Eric, what you said earlier, there are underwriters in our industry who will put their own overlay on a deal, and you got it. If you don't understand the guidelines and call them out, you're going to be a victim to it.
Eric, just so you know, there's 2 banks that I use for this. I alternate between the 2 they're my favorite go-tos. And one says you can't be late at all during your chapter 13 at all. And the other says you just 2 years clean. If you're like 4 years into it and you had some trouble 3 years ago, I can do it now as long as 2 years are clean. And I think that's a mistake. And I'm not saying anything. I'm taking advantage of it. I'm closing those.
I think the first one is closer to being right, because the way I've always understood it, it was you cannot be late on the last 12 the last 12 months, or they say the last 12 chapter 13 payments. That assumes that there's 1 per month, not that they're split up 2 per month and it's only 6 months worth, right? So that's the way I've always understood it. You can't be late on your chapter 13 payments. And Alex, you said a few minutes ago that if there was something that was not part of the chapter 13, you couldn't be late on that at all.
Right.
So
just in that 2 year win, only if you're doing it 1 to 2 years into the 13, then that thing you kept out of it would be part of that manual underwriting guideline.
Okay. Now
I'm hearing also from other people, they call me and let's say they talk to Rocket Mortgage. Rocket says, You have to be 1 year discharged from a Chapter 13. I think it's 2 years discharged to do a standard FHA. But people are telling me that they were told 1 year. I don't know what that rule is. I don't care because I'm doing anytime during, after, before, but I don't care about that. But there's so many confusion rules out there. I didn't say that right, but there's so much confusion out there. I don't understand what the guidelines are. And you read them and they're not clear. There's always a but if I miss. A but if.
Yep.
Yeah.
You know, I'll tell you, hold on a second. I have you know, I had it all listed on one of my web pages. I'm see if I can, because I dug so deep into this and I got it, you know.
Yeah.
But I'll come back to it. Now here's another question I have, which is, all right, late. So what if somebody has a car payment, $400 per month, and they don't have the 400? They send 200 on time. Okay.
At the due date?
Yeah,
Yeah.
they send the 200 before the due date on time. It's not late, but they got a past due amount now. You
That's
see what I
late.
mean?
That's late.
That's late.
Okay.
If you haven't fulfilled the whole payment by within the 30 days of the due date, even if you paid half, that's late. I've run into that.
I just ran into something new I've never seen. Someone was way ahead on their Chapter 13 payments, and they skipped like 3 or 4 payments because they were ahead. The underwriter said that they missed payments, and the trustee would not state in a letter. They would have done the loan, the underwriter, if the trustee would write a letter that they were way ahead, and they didn't. And the trustee said, "I'm not doing that."
Right.
Even though you could see it on the ledger, they were like $5,000 payments ahead of on their schedule, and
Yep.
they never went delinquent in terms of
Yeah.
in terms of all the payments being made,
Yep.
but they missed 3 or 4 payments, and the underwriter didn't like that,
Right.
and they require a letter from the trustee. So just don't be late, guys. If you guys want to get a mortgage, don't be late. Lates are complicated. We can win some and we lose some. We don't know when we're going to win or lose.
Eric,
Underwriting's complicated.
Yes,
Eric,
Dale.
I got a deal that I was working on in January and I got to wait till December to close it. The borrower was making his mortgage payment twice a month in halves, right? So like on the 15th and the 30th, but it was in December of 22, he had only made, he made 3 payments. Like he paid it in advance, 3 payments in November, but only 1 in December. And the underwriter said it, even though that he made a 3rd payment in November, which is applied to December, the fact that he didn't make a full month in the month of December counted him as a late. Therefore, I got to wait till this December to close as to earlier in the year. So I told the guy, go put the money like in a bank account, separate, pay it all at once, so there's no confusion like this.
Yeah, that almost looked to me like, as you're telling me the story, I'm saying to myself, they probably looked at it like that 3rd payment was an extra principal payment or something,
right?
not the actual mortgage payment, right?
That's what. Yeah, you got to make
December.
the full payment in the calendar month. That's
Yeah.
what they said.
Yeah, because it looked like he just sent extra money to pay down the principal, and it wasn't the real mortgage payment, the first mortgage payment in December.
Right.
That's what that seems to me.
And
so he fired back and said, "Well, it's November 28th. That's going to December 1st." I go, when you're making all these payments like this and you got 3 lumped in 1 month and only 1 in December, I go, you just kind of shot yourself in the foot, unfortunately.
Yeah.
So this reminds me of another rule that applies kind of, I guess. So if you are buying a house under, let's say, a land contract, or you're have a private lender of some sort, a hard money lender, or you've got some kind of weird financing where you know the person, it's a personal financing, it's a mortgage. Don't pay cash. Do not pay cash to that person. To prove that your mortgage is on time and not late, you have to prove by canceled checks or bank statements showing each month a full payment was made. And that person can't say that you paid it on time because he has an interest of you getting out of this mortgage. So you have to prove it that you're paying the mortgage. So never pay cash payments. Even if you've got receipts, you can't get away with that. You can't pay your mortgage with cash ever. Don't do that.
Right.
Never.
When it's a private mortgage, you'll never be able to refinance out of that. You'll never be able to prove that you paid your mortgage.
Now, we've had people make their rent or mortgage payments using like Zelle, for example. Now there's a paper
That's
trail in the
okay.
bank statement.
That's
That's
okay.
fine.
Yeah.
That's fine.
Yeah, if you're buying a house that you currently live in and you're renting and you're just paying rent, you have to prove that you paid your rent with canceled checks or a bank statement, and cash doesn't count. So keep that in mind. Now, if you rent from your friend and then you go buy a different house, your friend can write what's called a verification of rent form and say that, yeah, they pay rent on time. But if you're buying the house that you live in and you're renting, they're going to ask for proof of payment because that person has an interest in you closing the loan. Now your friend doesn't have interest in you buying another house, so they'll let him fill out a form, which makes life easier. You don't have to prove that you paid rent every month. It's a lot of paperwork. So keep that in mind. If
Right.
you're buying the house you live in, or you have a private mortgage that you know the person, don't pay cash. Paper trail everything.
Right. Hey, going back to our discussion before about the waiting period for 13s, it's 1 year for FHA, and USDA after discharge.
To do a traditional FHA loan without having to prove any payment history on
1
your
year.
bankruptcy. Yeah, okay.
1 year. 2 years for a 7, 1 year for a 13.
It's 2 years for conventional on a 13.
Um,
2 years
1
discharge from a
second.
13. Yes, it's 2 years
Yeah,
for, but it's 4 years for a Chapter 7.
correct. And yeah, so it's conventional. It's got the longest on a 13, which is 2, and the other everything else is 1.
Got it. So that's why I keep hearing that. It doesn't matter to me. I can do it either way, whatever, doesn't
Yeah.
matter. So it
So
becomes it doesn't be,
I
it's not
got
immediate. Yeah.
Alex and Eric, I got a lady I'm working with right now. She's 2 months out of a Chapter 13. She wants to do new construction. We can't do manual underwrites on new construction. I've told her what Eric just said, a 1 year minimum, and she's being told 6 months by 3 other lenders. Once she hits 6 months, that it can be done.
I would call AFR. So I shouldn't say names of banks on here, but they might be. I don't know what they're doing. They might be.
Wait. Before you get into that, Alex, with them, Dale, when you say new construction, you don't mean a construction loan. You mean a mortgage to purchase a home that was newly built and they're buying it after the home's got CO, certificate of occupancy.
No, she already bought the land and she wants to build on it, like
A
with the land.
construction loan.
One-time
Yes.
construction loan, OTC.
See, yeah. That's different. I agree. That's different. And Alex, the other people you just mentioned, I know them. Right now, they're only doing manufactured homes.
They're only what?
They're only doing manufactured homes right now. Yeah.
They're not doing
On a
regular
new construction.
At least that's the way it was about 5 months ago. Yeah.
So
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 I
they
think
will build it. Yeah. So they'll build them. They'll buy the mobile home from the mobile home park. They'll take down the land and they'll construct the mobile home onto the property. Correct.
right. So it could be a land mobile home purchase or a land prefab home purchase. Because they didn't tell me why, and I don't know if they've reverted and they went back to stick built yet, but that's the way it was for the majority of 2023. And from I'm surmising that they want the process to be over quicker. They don't want the thing dragged out because it's more risk for them with the housing market that could decline. All the things could happen, especially with only 3.5% down, where the borrower could run away if the bottom drops out of the market, not actually close the deal in the end, or materials go up again. Like there's too much risk. There's less risk actually for them, in my opinion, by doing manufactured homes.
Right. There's very little construction. That's why.
Yeah.
It doesn't
So-
take all sorts of surveys and.
Well, you still need all the surveys and everything, but you have fewer inspections. You have, the thing gets put together quickly.
Yeah.
Right.
You can get it done much quicker.
It doesn't drag out, like you said.
Yeah.
If you-
Plus,
if you
fewer
close
inspections,
Yeah.
fewer draws, fewer visits to inspect the loan process. So it's a lot easier for everyone. Go ahead, Alex.
Have you closed some of those recently? Are they paying the ass still?
They are the thing. Here's what happens though. I think what happens is that the borrowers or the people that want to build, like if they already have their own land, then they're moving ahead because they already got the land.
Right.
For the people that heard about the program and they think it'd be cool if they could build their own house and go, then they realize how much work they have to do. And then once their builder realizes that, especially with the wholesale lender you mentioned a couple minutes ago, the builder's application is far more in depth than the borrower's application.
Right.
And the builder's like, I'm not doing this 20-page application and giving you like, I'm not doing this. You know, it becomes very difficult.
Eric, I'm going through that on, I have a conventional, this is a different type of deal now. I have a conventional second home purchase, one-time close. And I've been going, it's been about 3 weeks now trying to get the builder approved. It's back and forth. Like you said, all the questions, like it's really, in depth is a nice word. I could say something else, but I mean, they're really like pressing the builder for a lot.
Yeah. And I think, you know, as loan originators, not speaking on behalf of the customers who might be watching the video, whereas if you can get hooked up with a really good builder and you get that builder approved through the wholesale lender the first time, then you work together and then you sell the program in to the customers, and you know, you can got this little thing going there. You know,
Yeah.
the builder's already approved.
Right.
So
No,
that's where it's done.
If I'm able to get them approved, I will go visit the builder.
Exactly. Yes. And then if you've got a builder in the area and you got a customer and you've got this little network of builders, I mean, we're talking about something that takes a while to put together. But this doesn't help the people that are watching, you know, but it's just more of a reality check for them that are looking to. But back to your scenario, if it's new construction, because that's what I had to clarify, it's a brand new build, they're going to buy it from the builder after it's done. That's different.
Right.
And it's the normal process with the chapter 13.
Yeah.
But you can't do a manual on a one-time close, correct?
I don't think they'll accept it.
I've never seen that. So
no, you got to be AUS approved.
Yeah, so I guess you have to wait 1 year from discharge of the 13 before you can do that. Now,
is that what the waiting period is, Alex? 1 year from the 13?
1 year for FHA, VA, and USDA, Dale. 1 year waiting period for 13 on those.
For it to be an AUS approvable, not 2 years. So now just think about this. After 6 months of being discharged from a 13, your chapter 13 payments are still under the microscope until you get to that 1 year discharge. So remember, once you're discharged and you were late on your bankruptcy, being discharged does not get you out of having to show your payment history on your chapter 13. You're gonna have to wait until that 1 year period when the computer can approve you, and they don't ask for the history anymore after that.
All right, let me throw a wild card in here. Somebody decides to dismiss on their own their 13 after they made a few payments because, you know, they won the lottery and they just want to pay everybody off. And
that would be a true manual underwrite. Okay, so that's a true manual underwrite. That would be the 24 months window. So if they weren't late going into the bankruptcy, that'd be one thing that have. If they just made 2 payments, they couldn't be late for 2 years prior to that. Kind of whatever the same rules, 12 months and then the prior.
They haven't made 12 payments either.
Right. You can do it. I've done 2 days, two months after dismissal. The hard part is getting the payments on all your debts that, you know, you have to credit supplement all your debt that was included in the bankruptcy. You have to start battling the people that you bankrupted because they're, as soon as you dismiss it, they're going to start marking you late. So you got to get ahead of that. And if you don't apply for the mortgage the day you dismiss it, within a month, you're going to have a bunch of lates all over your credit report. So when you dismiss your bankruptcy, attorneys don't tell their clients this. When you dismiss your bankruptcy, you've skipped a couple payments because you 2 months
Alex, the debts are being partially paid too, right? They're not being fully right.
And not all the debtors get paid in the first tranche. You know, they really pay whoever this, that, and the other thing. You don't know who's going to come after you. You have to get ahead of those debtors, and then you won't have any lates. Then you can do it. I can do 2 months after dismissal, no problem, if you pass the test and you get in front of that monster that's about to attack you of marking you late from the people that you bankrupted. You have to call them all up and say, look, don't mark me late. What, I'm going to go back to paying you. What do I need to pay you right now for you not to mark me late for the last 2 months because I'm just dismissing my bankruptcy? I want to make good on that. And you have to do that because that could pop up. You never know. You have to run the credit report 45 days later for an update if there's a dispute, whatever. Bam, there they are. So you got to get in front of that monster. It's happened to me before. So I know that's how I learned. I'm like, oh my God, this credit report's a mess. That's what happened. They dismissed it and then they got attacked.
I've got another one. You're making on-time payments to the, for your bankruptcy, but they're not paying the creditors on time.
Right.
They're not forwarding the money. Right? Now it looks like you're late, but you made the on-time payments.
You're in trouble.
You're in trouble.
I mean, that can get you. You need a trustee to write you a good letter. It's my fault. I was wrong. It's like asking Fonzie if he was wrong.
Alex, don't ever ask Fonzie if he was wrong.
This is for the old people out there. Fonzie was a guy who, if he was like the coolest guy in the 1950s soda shop in a sitcom back in the
Arnold's was the name of the shop.
Arnold's, that's right.
And everybody looked up to him. He was the coolest guy. And when he was wrong, they would make him say he was wrong. And he would go, I was wrong. He couldn't even say the word wrong. So that's hard to get trustees to say that they were wrong and they screwed up and put it in writing.
Mhm.
So if the trustee does something to you, they have to write a letter saying they did that to you. So, and that's the only way around that one.
Yep. I mean, I brought that up because that hit me, that, came to my mind too. It's happened many times, right? So
Yeah. As long as you can prove it's not the borrower's fault, you can get away with things.
and then you're relying on the underwriter again.
Yeah.
Alex, have you ever gotten a trustee to write that letter?
Not that letter, but I've had trustees write letters before. I forget what, but I've gotten it done. You can get trustee letters as long as it's within reason. You're not asking them to, lie. If it's just a truthful event, no problem. No problem.
No, I'm talking about the letter like, hey,
No, that's a
the
hard one.
client paid the bankruptcy on time, but we didn't pay the debtors on time.
I couldn't get the trustee to write a letter saying that the borrower's ahead, They wouldn't.
Yeah.
So you can get letters. I shouldn't say not a problem, but it cannot be a problem, but it can also be a problem. So you never know. I mean, you never know. And these underwriters won't take letters from the bankruptcy attorney anymore. They used to, but now it has to be the trustee because the bankruptcy attorneys, he'll lie for the client. But so you need trustee letters from the trustee stating why was this marked late when it's taken out of their check. And this is how I've had one done before. So they didn't report the payment as received by the 30th day because they got it on the 26th and it was a Friday, and they just recorded it at the NDC website, which is a national data center website where they record payment history, and it reported it late, but they weren't late. The customer said, look, it comes out of my check. The second payment it came in late, and that trustee had to write a letter saying, yeah, that's our fault. We mailed it out late. That wasn't the borrower. They paid on time. We received their payment within the 30 days. That's a common letter you're going to get from a trustee. But anyway, I think we've said enough about lates. Don't be late. If you file a bankruptcy and you're coming out of a 7 or a 13, or you're in the 13, don't be late. You are eligible to buy a house. You are eligible for a mortgage. There are all sorts of programs for you out there. Just don't be late. All right? You guys have anything else to say?
No, be very diligent about your payments and documenting them.
All right.
Don't be late. I totally agree.
All right. Well, thank you guys for watching. We'll see you next Thursday.
Okay. Thanks, everyone. Bye-bye.
Have a good night. Take care.
Bye.